Welcome to Looking at the Markets with David Modell. Today I'm going to give you a quick and basic introduction to point and figure charts. Some people might look at them and think they're complicated, but I'm going to break it down for you and make it really simple. And this is just an introduction, it's not everything. Alright, so it looks like tic-tac-toe, right? Well, X means that the price went up. O means that the price went down. Alright, so X means up and O means down. And this, by the way, this is for Apple stock, this chart. And these charts all come from stockcharts.com. Alright, so X means the price went up, O means the price went down. And time has nothing to do with it, by the way. Nothing on this chart right now tells you how long it took for Apple to go up, that's the X's, or how long it took to go down, the O's. It just says that it went down and then down and then down, then down, then down, and then up and up and up and up, and then down and then up and then down. Alright? So if you don't mind the fact that time is not really represented all that well on your chart, if you're a long-term or medium-term investor, then this might be very useful for you. So you can eliminate that factor, or at least focus more on price movement or price action as opposed to how long it took. Alright? If you're maybe a day trader and time is more of a factor for you, then this may not be your first choice, although it could be, depending on your preferences. So, X means it went up, O means it went down. Now, how much did it go up or down? Well, it depends on the price. If you'll notice over here, the increments are $1. It's $1 increments below 100, when Apple was below $100. And if you'll notice, above 100, the increments increase to $2. So it jumps up $1 per box. These are all boxes. So each box represents $1, and then it's $1 increments here, and then above 100, each box represents a $2 movement in price rather than $1. Okay, and I'll break it down more specifically. Here's a chart, again from stockcharts.com, and as you can see, when the price is between $20 and $100, then each box represents $1 of price movement. When it's between $100 and $200, each box represents $2, and so the scale changes, or the increments change. So it depends on the price of the stock at that time. That determines the increments, meaning how big the boxes are, or how much they represent. All right, so let's go back to the chart here. So when Apple was under $100, each movement represented $1. And so look at these X's here. It was $90 a share, and then it moved up to 91, then 92, 93, 94, all the way up to $99. All right. And of course, at any given moment, it was not exactly $97 or 98 or 99 all the time. It was 97 and change, 98 and change. But it just kind of keeps it simple for you. It rounds it, all right, so to speak. It just kind of rounds it to the, whenever it reaches a certain price, you put an X in the box. That's all it is. When it reached 97, you put an X in the 97 box. When it reached 98, you put an X in that box. When it reached 99, you put an X in that box. Or I should say stockcharts.com did it for you, okay? So that's the standard setting. It depends on the price, how much each box represents. Now on the standard settings, when the price turns around and goes 3 boxes in the opposite direction, then you move over and make a new column going in the opposite direction. Okay, so down here, each box represents $1. So X means, remember, X means it was going up, and I'm looking at the scale, and I know that means it's going up $1, $1, $1, all the way up to, let's say in this column, it went up to $99, maybe a little bit more, maybe $99 and change, but not up to 100, because there's no X here in the 100 box. I know it's $100 and there's no X here. And I know that it turned around and went 3 boxes in the other direction. Okay, because there's no X here. The X is stop. So on the standard settings, which you can change by the way, but on the standard settings, as soon as it turns around and goes in the opposite direction at least 3 boxes, then you change the letter from X to O or from O to X, and now you have a new column to the right and you go in the opposite direction. So I know that it went in the opposite direction here, and now we change it to O's. And look at that. Notice that the columns are all at least 3 X's or O's because it takes at least 3 boxes in the other direction to make a new column and a new letter. All right. So it went from 99, 3 boxes, 1, 2, 3 in the other direction. They still drew the O's for the for these boxes because it didn't just jump 3 boxes. Okay, it turned around and it traveled 3 boxes. All right, it still had to go through 98 and 97 to get to 96. All right, so it went from 99, turned around and went to 96, which is at least 3 boxes in the other direction. But they still had to plot all the O's on the way to 96. You know, they still plotted 98, 97, and 96. All right. Notice there's no O here, so I know that it turned around and went back in the other direction, back up again, at least 3 boxes. So it turned around and went from 96 to 99, but they're not going to neglect to fill in the fact that it went through 97 and 98 on the way to 99. And it actually went more than 3 boxes, but it has to go at least 3 boxes in the other direction to make a new column and a new letter. All right, so it went from 96, or perhaps 96 and change, turned around, went to 97, 98, 99, and then went a little further into the 100 box. And I know there's no X here above that, and so it turned around and went this way at least 3 boxes. And then it turned around and went this way at least 3 boxes. Then turn around, went this way and up. And notice that above 100, now each box represents $2 per box, $2 of price movement. And so it went to 100, went to 102, 104, 106, 108. I see it didn't go to 110, so it must have turned around and went at least 3 boxes. And there it is. It went exactly 3 boxes down to 102. But of course, they still have to plot the fact that it went through 106 and 104 to get down to 102, and then turn around and went up and down and up. And again, time is not a factor here. It doesn't say how long it took to go down to $102 a share and then up to 116 or 116 and change or whatever it was. I say 116 and change because it probably didn't go exactly to 116 and turn around. It might have gone to 117 or 117 and 50 cents or 117 and 99 cents, whatever. But it didn't reach 118. I know that because there's no box here. And it turned around and went this way and then all the way up here. And it tells you the current price, okay? So this tells me, since the current price is here, it went up and it went down, turned around and went down a couple of boxes, but not 3 boxes yet. I know that because if it went here and then went down 2 boxes, it must not have gone down 3 boxes because then it would be a new column with O's here. All right. So hopefully that's a lot to take in at once, but hopefully that makes sense to you. All right. So you may have to probably want to study this more. Now, just to give a sense of the passage of time, what you can do, at least on stockcharts.com, you can make sure that hide months is unchecked and then update it, and at least it'll tell you some idea of the passage of each month. It's not going to tell you every single day that passed, but if 1 is January, 2 is February, 3 is March, April, May, June, July, 8 is August, 9 is September. They didn't want to write 10, so they wrote A, B, and C for October, November, and C is December. All right, so B is, November, C is December, and 1 is January, 2 is February, and so on. Just to give you an idea of the passage of time here, of the months going by. and this is 2015, 2016, 2017. So clearly this is a long-term investor's chart. This is probably not as useful on a minute-to-minute basis for day traders. All right, and using this chart again helps eliminate the concept of time to a certain extent, so you can just focus on the price action, and you can see trend lines very, very easily. That's a huge advantage of this method. And they'll even draw it for you here on this website. And you can see some trend lines, and trend lines they're subjective to a certain extent, okay? But they'll draw some ideas for trend lines for you, and you can make support and resistance lines. For example, you can see it bounced off of here, this horizontal line 4 times. 1, 2, 3, 4. So you might call that a resistance line. You might call this a support line since it bounced off of here several times. You get the idea. It's very easy to draw trend lines, support lines, resistance lines, that kind of thing. Alright, so this is a very basic introduction. I suggest that you learn more about it on your own. If you'd like some help learning about these things, or learning about stocks, options, finance, investing, and trading in general, you can email me at any time. My email address is davidmodell@gmail.com. Thank you so much for watching and listening. If you like this video, please give it a thumbs up on YouTube and leave comments, and please subscribe to my YouTube channel so you can receive the latest updates on my financial educational videos. Thanks a lot, and I'll see you again soon.